Hi there, my name is Richard Johnson. I'm very excited to be here hosting this Coinscrum session with Yoann Turpin from Wintermute Trading and Chen Arad from Solidus Labs. We're going to be talking about crypto market integrity, but first let me introduce myself. I'm the founder and CEO of Texture Capital. We are a US-based firm building a brokerage firm to issue and trade security tokens. Before this, I spent some time as a crypto and blockchain analyst at Greenwich Associates, and before that, a bunch of years on various different trading desks in the equities world. Yoann, over to you. Do you want to give us a quick introduction?
Yeah, thanks for sharing over here. Good to meet you, Chen. Good to meet you, Richard. I don't think we interacted in the past. Quick background on myself. Started trading quite early. Covered options. Spent some time at Optiva, like my co-founders, and spent some time on the, let's say, the very high frequency, very low, very short-term trades, and then very long-term trades on the angel VC side as well. And we set up Wintermute in 2017. It was initially set up by Yevgeny and Arad, two of my ex-colleagues from Optiva. Yevgeny's got some of my co-founder and CEO has got some ETF background, and I've got the option background essentially. And then Arad, our CTO, did a lot of work on FPGAs and low latency and cybersecurity. So we set that up in 2017, covered spot mostly, and now expanding into more derivatives. So very much ultra high frequencies. Yeah, keen to discuss that more with you guys.
Great. Over to you, Chen.
Yes, so my name is spelled Chen. It's actually Chen. I'm originally from Israel, and we have those sounds in our language. Don't worry about it. It's confusing for many. Totally fine. So I'm the Chief Operating Officer of Solidus Labs. I'm actually a former journalist, including financial journalist, but I'm the exception on our team. The company was founded by a group of former Goldman Sachs fintech engineers, mostly from equities trading. And we provide crypto-native market surveillance. Essentially, we help detect, investigate, and report and prevent market manipulation in digital asset markets. That means, more practically, that we help exchanges apply for licenses, comply with regulation, and also protect their users. We also work with regulators to help oversee markets with our technology that's tailored for digital assets. I guess I'll stop there, and I'm happy to elaborate later.
Yeah, I'm looking forward to a great discussion. You guys obviously both have a lot of really good experience from traditional markets and now in the crypto space. It's been kind of a wild ride this year. Again, we are up 20% on the year in terms of Bitcoin, but we were also down 20% at one point. There was a pretty significant market rout in March, but then that kind of coincided with everything that's been going on in the equities world and in all global markets, in fact. In general, though, it seems that the markets have held up pretty well. Some other news I think worth mentioning is that we've had the halvening this week, so that's very much changed some of the supply dynamics in the market. And you've had some big news as well, such as Paul Tudor Jones coming out and saying he's got 2% of his net worth or his investments into Bitcoin, and you know, JP Morgan now taking on crypto companies for the first time. That's quite a landmark move. So obviously we've come a long way, I think, since the last halvening 4 years ago. What would you say, in general, just to open it up, what would you say is, this one's to you, Yoann, how do you think the market's held up over the last few months?
So the last few months has been, so halving is always an interesting one where, you know, everyone knows that it happens every 4 years. It's always a difficult question on like how much is priced in and how much isn't. I mean, if it's a known event, then it should be broadly priced in. In the space in general, so just removing quant elements as such on the qualitative side, and it's more me, you know, speaking as a former interest rate trader and listening, or used to listen to central bankers all day, is with the state balance sheets expanding quite dramatically, we'll end up with you know, a lot of money or money willing to diversify away from the fiat currencies, and that should really help the Bitcoin or Bitcoin in general, because Bitcoin has the brand and the crypto space after that. So echoes from Paul Tudor also and others are quite interesting. I was talking to some large institutional brokers earlier this week who were telling me that they've just opened shop. They mostly open shop, and it could be an interesting point for Solidus on the regulatory aspect. We see institutions coming more on the CME side, or where things are really strongly regulated. Most likely, it's also because these brokers can cross, trades. It's easier for them to cross things, and it's easier for them to convince the management. But there's more and more traditional money coming into the space, and I think the movements in the markets for the last few months have helped that, help people to diversify away from essentially. Equities, I'm not too sure because it's so inflated that it's still going to go up. But at least there's some of that excess money that comes into the crypto space.
Yeah, and obviously, some of the changes we've seen in the last year to 2 years is these more institutionally focused exchanges coming in, like Backed, like RSX, and some of the others, clearly making a difference. By offering these futures, they're able to absorb more capital into the market more quickly. How are you finding? I'm going to throw this over to Chen. How are you finding this in terms of a surveillance point of view? With an increase in number of exchanges, how does that make your job harder, or does it? Or how does it make your client's job harder?
Well, I'll start a little bit by how we see the market has changed, because we really look at it from an infrastructure level, working with the exchanges and regulators. I think a good way of looking at it when we think of market integrity is that 2 years ago, the CEO of Kraken, for example, said, public crypto traders don't care about market manipulation. That was probably, something that many other people shared in the space. That is no longer true. I was just at the conference a couple of months ago, and the head of institutional growth at Binance, right, which is not necessarily historically associated with being too regulation focused, said that market surveillance is extremely important for exchanges that want to grow. Similar statement came from the CTO of Bitfinex recently. We kind of remember, we're a bunch of former Goldman guys. It was clear to us compliance was going to be an issue. And we decided to focus on secondary trading and market manipulation. We would walk into crypto conferences in 2017 saying market surveillance, and people would raise their eyebrows. That's not the case anymore. That's true for many reasons. I think a part of it is just that it is exactly what Yoann is talking about, right? The institutional interest. At this point in the evolution of the industry, it's clear that crypto is here to stay. Richard, we just chatted earlier about the fact that Jamie Dimon at JP Morgan completed his U-turn, right? From saying that Bitcoin is sham to now accepting Coinbase's and Gemini's money, right? Crypto is here to stay. The question that the industry is asking itself is, what does it need in order to grow? And the answer there is increasingly clear, is integrity. And it's very clear to us that the key to integrity is regulation and compliance.
Staying with you real quick, can you just give us some quick examples of some of the unique surveillance patterns you're looking out for that are unique to crypto?
Yes, so I'll start with the market level and then go to the individual exchange level, just because you brought up the SEC recently. That was actually one of the reasons we decided to focus on market surveillance, because we saw that many ETFs are being repeatedly rejected, even when some of the exchanges that applied, or the entities that applied, were applying to trade those ETFs in fully surveilled and regulated exchanges, right? And some of the crypto exchanges that were rejected were already deploying surveillance systems from equities or the traditional financial system, right? So we said there must be a unique problem here that needs to be solved. The reason the SEC rejects those applications is oftentimes, if you look at those documents, the rejection documents, the last one I looked at is about 90 pages. The word market surveillance appears, if I remember correctly, 130 times, and the word manipulation appears even more than that.
Yeah.
And often in the context of shared surveillance. And that's very unique to crypto, because basically what the SEC is saying, right, even if the exchange itself is surveilled, the underlying is not, because it's traded across so many different exchanges, right? And that's very unique to crypto. The assets are not native to the exchanges, as is mostly true in traditional finance. And so in that case, we are actually working in a few different places with regulators who are working with their exchanges, especially when there's specific regulation and licensing requirements, in order to do a shared surveillance a solution that would oversee the markets across. That's on the market level. Another thing that's unique to crypto is that you can see, for example, what we call hybrid forms of manipulation. I mean, we all know wash trading, and we all know layering and spoofing that are common and are completely illegal in traditional markets. That happens a lot in crypto because there isn't enough surveillance right now. By the way, part of the problem is that it's very hard to know exactly how much it happens, but there is a lot of reason to believe it happens a lot, that it happens very often. There are, as you asked, Richard, specific forms of manipulation that are unique to crypto. For example, we would sometimes see a hybrid instance where we call it hack and fraud, where someone would be able to hack into an account, which happens, and that's a security-related issue. Sometimes it would happen through social engineering or whatnot. Into the traditional world, it would try to withdraw thousands or millions of dollars or whatnot. There would immediately be a red flag imposed by the surveillance system there. However, in crypto, you can start trading 6 Bitcoins for 6 altcoins, right? It's completely non-economical, but it's unique to crypto. So it's something that the traditional systems are not used to and often would not flag. It's important to remember that in the traditional world, surveillance systems were usually rule-based, meaning you know what you're looking for, you plug in an equation that knows to detect that if that happens and that happens, then you should get a red flag, and you detect it. However, what we do is we have a rule-based system and we augment it with a layer of statistical analysis, or the buzzwords everyone likes to use, machine learning. Yeah. And in that sense, we can not only detect forms of manipulation that we know, but also anomalies, new things that we believe the exchanges, once we compare historical patterns of account behavior, oftentimes we also integrate the KYC AML part, that comes from on-chain analytics companies. And when you put all of this through statistical analysis, often we detect anomalies, and we're able to provide a risk score, and therefore over time detect new forms of manipulation, and just really make sure that the exchanges in the individual case and regulators in the entire market case are able to look into what they need to look into while reducing false positives and other challenges.
Yeah, thank you for that. Coming back to you, Yoann, you've also come from traditional markets. I think some of the founding employees are from Optiver, the big Dutch market making firm. Mm-hmm. What are some of the differences you see in trading the crypto markets versus traditional markets?
So there's a few big differences. I would say there's the crypto specific infrastructure issue around, especially if you trade spot, exchanging addresses, chain or time, waiting for the blockchain to confirm a transaction and things like this. So I think especially so Wintermute trades across many exchanges, and the time that the funds are essentially not available between transfers, that's one big difference. There's a few other differences in terms of people people like you who use the traditional finance, where many functions of the prime brokers are actually not there. So many functions in terms of lending, borrowing, or the cross-margining functions, there's a lot of these dimensions which are not there, or you can rebuild, but basically block by block. So it's actually a big difference. It's being, it's getting sorted with many more exchanges focused on derivatives and so on. So some of the crypto native problems are solved through that. But that's the main infrastructure difference, I would say. In terms of the API and the integrations, I mean, traditionally that you go through fixed integrations with Eurex, the CME, and the rest. Mm-hmm. And a whole lot of crypto native exchanges have been built on basically web or REST or web sockets, and it's a very different way of integrating and managing flow and how quickly loaded an exchange can become. I think
do the exchanges need to upgrade this connectivity and utilize more traditional protocols like FIX or something like that?
So you can really see the older crypto exchanges lagging a bit behind and doing some M&A also. So Kraken is an example. Yeah. It's probably actually the first exchange that Wintermute integrated with in 2017. But I think one of the big dimension behind the crypto facilities acquisition has been that crypto facility has a much faster matching engine, and it's just much more robust to flow. So that's one of the main examples. After this, you can see that typically the main Chinese exchanges, you can generally see the older they are, the slower or the more cluttered the matching engine can be when things aren't moving. And also typically, Huobi being the more cluttered, and then OKX, and Binance being a lot easier to deal with.
Your ones, of course. What are some of the changes? You mentioned crypto facilities, the acquisition by Kraken. What are some of the other changes in the market that you've seen since Wintermute's been active that have led to improvement?
Blockchain.com, we've done a lot with them over the years. Completely biased, obviously, because we know them quite well. But they've managed to find, I think, a good middle ground between. I think to add more context, I think for crypto exchanges versus traditional asset exchanges, there's a whole aspect around security versus speed of transaction. That's a very difficult one to get right. So you could get an exchange that's very secure, that will last long term, but that's not necessarily the fastest from a trading point of view. Mm-hmm. And then they have to balance, how much work and an effort they put on the security side first to make sure the funds are secured, and then you can trade. But blockchain.com as such, we found quite good at looking at and implementing fixed and collocations like Eurex would do. So I think they might have some of the Eurex team on board, a former Eurex team on board by them. There's a few like this, and then you see some teams hopping between exchanges over the years. So typically, I think one of the first CTOs of Liquid is now part of Diginex, or people like this who evolve, build an experience on the first exchange and then just go somewhere else, build another exchange or so. And that's I think we're getting into a nice middle ground nowadays between with the more recent exchanges, where we have a good balance between security and then the speed of the matching engines. Because we had no issues on the final downtick or so, and on March 12th. We do see, and again, it's always from my view and my microcosm of being very active and trading very high frequency. So obviously we tend to be the better customers at the exchange, so they would tend to treat us quite well. But there's many other dimensions we could talk about, like how quickly you can withdraw from an exchange, a margin over there. And there's still quite a lot to work on, to be honest, in terms of margining, especially, and in terms of just to bounce back onto what Chen was saying, is that making sure that every other participant in a certain exchange, behaves according to a certain rule book. I mean, I was surprised years ago to see so few exchanges with a rule book. Mm-hmm. We're simply saying this is the behavior we accept, and this is the behavior we don't accept. And to reinforce again what Wintermute has always been about, we came into the crypto cycle a bit later, and basically raised the first round of funding within Crypto Winter, and then it was always about more institutionalization of the space and more validity. And if you want more funds to come into the space, then it has to be very much legitimate, and people need to trust the prices. And the only way to really trust the prices is by having everyone aligned in terms of what is an acceptable trading behavior.
It's a fascinating topic, and we could certainly talk about it all day, but unfortunately we are running out of time. I need to wrap up, so I'm going to throw the last question out to Chen. Looking forward over the next 4 years, between now and the next halving, what changes do you think we need, or do you think we can expect to see in the markets from an integrity point of view?
Look, I think that the recognition that Yoann just spoke to, that if we want to grow, we need compliance, and we need to be with more integrity, is there. The market gets it, and you can see that across the board, even with some of the early exchanges. There is a desire to improve integrity. However, there are still a lot of challenges. I mentioned that more and more exchanges are talking about deploying market surveillance. At the same time, if you look at the Crypto Compare benchmarking report that I believe came out about a month and a half ago, the last one, it ranks exchanges based on volume credibility. Out of 160 exchanges it ranks, only about 10% had a surveillance system in place, and many of those were self-developed, which, by the way, is becoming more and more of a regulatory challenge, with locations like Hong Kong where the Securities and Futures Commission there actually requires an independent, reputable provider for market surveillance so that they can trust it better. So I think the recognition is there. It took a while, and we're there. And the question, in the next couple of years, we're going to see more and more of those systems implemented. I expect that within the next year or two, almost every place in the world where you want to operate an exchange will require some sort of a license, and those licenses will require similar checks and balances that we see in traditional markets. What we need to do as the crypto ecosystem is make sure that we, first of all, develop the tailored tools that will enable and empower the exchanges versus slow them down, right? And then also work together as a community to develop the tailored rules, right? We're involved with a number of industry membership organizations. We are the market integrity chairs at the Global Digital Finance, where we've been working for over a year with a group of 40 entities representing the entire ecosystem to develop a code of conduct for market integrity. The more of these efforts take place, and that code of conduct it refers to many different kinds of actors, from traders and how they should ideally behave and encourage them to behave fairly, just like Yoann is doing with his firm, to exchanges and trading platform, and also journalists, that are part of this ecosystem. I believe the recognition that we need to be committed to integrity in order to grow, and to compliance in order to grow, is there. And in the next 2 years, we're going to see it being implemented.
Yeah, that's an important stat that I wasn't aware of. Only 10% of the biggest exchanges have a surveillance platform in place. I think we'll definitely need to see that increase over the years. Bitcoin can travel around, crypto can travel around very easily. Something to look forward to, but it seems like all the pieces are in place. We need to build on it now. That's all we have time for, unfortunately. Thanks very much, Arad from Solidus Labs and Yoann Turpin from Wintermute Trading. Great chatting with you.
Thank you, Richard.